Trade Genius.
What's going on, guys? Philip at Trade Genius. All right, this is going to be our 2020 Bitcoin Outlook video, macro look, and looking at major levels that we think are important for the year, and then also what we can expect price action to be for the year. So let's dive into this video and get into the details here. First off, we got the weekly chart up. What I'm seeing is a move that went down into a B move, and now we're currently working on the C move, which is going to take out these all-time highs. And then what's interesting to note is we've got a smaller ABC in this most recent move up from the bottom. We've got an A to a B, and now we're going to work on a C. So we'll have a C going into a larger C move, and that's very bullish structure in my book. And that ultimately is going to take us to new all-time highs on the larger ABC structure. Now, looking at a weekly chart here, obviously this trend line is going to be key, in once we break that, it's going to bring us to this other trend line that would need to break. And that's really going to, once this trend line breaks here, and that's probably going to be somewhere around the halving period, we're going to see basically that's going to open up the gateway for taking out the important quarterly levels, which we're going to get to in a second. I know we have these highs, 17,178, and then our all-time highs. Those are key levels that will get tapped into as we run up, and there's probably going to be some reaction off of those. But there's actually a quarterly level that we need to key in on, and that is going to be 13,899. Okay, and the reason for that is because typically when we look at the quarterly closes and open after the peak, the blow off peak, that's an important level. Price always comes up to those previous open and closes, and then basically will resist off of that before breaking through. We saw it here in from the 2011 peak going into the 2013 bull run, and then we saw resistance here right before halving in 2016. This is the pump that we had. You can attribute that to the plus token Ponzi in China gobbling up a lot of Bitcoin and forcing the cycle to prematurely hit these levels. But it's rejected off of there. This is a very standard operating procedure. And so it really comes down to how long before we come back up to that level and break through. 7 bars on our first cycle, 12 bars on our second cycle. Average of that would be 10 bars, which I think is within reason, because I think this cycle speeds up a little bit more than our last halving cycle, which would take us to April 2020, where we test these levels at around 13,000, like I said, 899. So that would be the kind of where I would expect price to be based on what I'm seeing here. Now, obviously, this could be off by a quarter, but that would be within reason, I think, as far as price action goes to the upside. Regardless, that's going to create a great buying opportunity where we stand right now today. So, again, good opportunity here. I know there's a lot of smaller moves and buy signals and entries, but largely speaking, quarterly, yearly outlook, this is a great level to be accumulating long Bitcoin for the longer hold through halving and beyond. All right, if we move to the stock to flow indicator, now I would show this on TradingView, but guys, keep in mind the stock to flow indicators on TradingView are currently broken because the data provider Quandl that supplies the on-chain data to the TradingView environment isn't updating all of their indicators correctly. There's several different on-chain data points that can be used in TradingView. Currently, the amount of Bitcoins being produced is not updating. So that's screwing up the stock to flow indicator on TradingView. Hopefully that gets resolved. But so currently, the best one to go to would be digitaleak.net, and that's where we're at now. And if you look, stock to flow will jump after halving. And if you apply the stock to flow pricing model, instantly that would imply that we are going to be expecting $90,000 Bitcoin to ultimately 100,000 plus. And what we typically see on these, when the Bitcoin halving happens and stock to flow jumps and we've got an implied price, we typically see that pricing model get hit within about 12 months of the jump. So, jump back here after the halving in 2012, that had an implied price up over 200. And we ended up seeing that shortly thereafter in 2013 on that run up. And then all these run ups hit that price and then end up going way over. And that's where you start looking at how overbought things get. And that's going to be important on this next run up. We saw in 2016, after that having implied price jumped up as high as over 9,000 up to 11,000. And then obviously that was in 2016. And then a little over a year later, we saw those levels. So if you give it about 12 months after the halving, so that's going to take us out to the middle of 2021, you'd be expecting to see these types of prices. So how that works is the supply is cut in half, demand will be ever increasing, and you're going to get supply shock and basically start running up these prices, and then things are going to normalize, and you're going to have average median price up in these ranges, and then it'll fall back and you'll have, you know, your dips. Although here's the thing to keep in mind going forward: when gold got broadly accepted, it stopped having these big peak to troughs and went on a decade run going up before it saw a major sustained pullback. So you could see this cycle not do that 80% correction at the post peak, which would be somewhere in 2022. Yes, there'd be a pullback or consolidation, but you may not see these big peak to troughs, and you go into a growth, broad adoption phase where you have a sustained upward trajectory, say 5 years, because things happen a lot faster in Bitcoin, crypto than in say the legacy commodity markets like gold. So gold at a 10-year run, you could see maybe a 5-year run, similar structure though. So just bear that in mind. There will be a lot of people that look beyond 2021. That year and a half past the halving, so that takes us to about that December mark in 2021. People will be looking at selling at that top, and there might be a big surprise where it doesn't really give back those gains and continues to move higher. So that would be a shocker for the market. And I think that comes, whether it's this halving or the next one, but there's going to be that moment where Bitcoin doesn't do that pullback and will do a gold-like run, sustained run higher. So that's going to be the question mark, I think, going into 2022. But this is, again, guys, big levels to be accumulating Bitcoin at, because we're going to go into halving and you're going to see typically that stock to flow hit. And I think the shockers here are just going to be if really to how soon these levels get hit. You know, does it happen in less than 12 months? Let's say we get like a spike after halving where we're starting to hit these levels well before the middle of 2021. Or is it a matter of where it's delayed and we really don't start seeing this ramp up until later in 2021 and we lag behind all of this stuff? That's, you know, we're just going off of 2 cycles mainly. And I think that the math behind Bitcoin, because the supply metrics are known and fixed and finite, I think these levels ultimately do come into play. It's really just a matter of timing. But I think in a year and a half, when you look back at these levels, it was going to look like, if you didn't buy, you're going to look at it like, why didn't I buy? Because it's so obvious looking at the metrics that this was the dip to be buying. So the last thing I want to leave you guys with is a cycle repeat graph. And the cycle repeat graph, I mean, obviously we have caught up to where we should have been. Again, Bitcoin got over its skis compared to what's expected in this cycle. Now it's met up to the expected pricing in this cycle. And again, keep in mind, there could be some downside consolidation, but then this is that last dip. These lows hold. Remember, our hash band, our mining hash bands flipped, right? So usually that indicates the lows are in, or with one exception, there was one last quick low spike, and then that was it. And because this halving's coming, and price, you know, people know, miners know that they need to be, if you're going to add hash power to the network, which we know the miners are doing, you're going to focus all of your energies on doing it now, before halving, not after. So I expect miners adding a lot more hash power. Watch the hash rate graphs grow. And when you see that, I believe that they will not be flipping over as many Bitcoins to the market. I think they're going to hold back and they're going to hedge the halving. And as price increases into the halving, you may see price pullback like is indicating here on the graph, on the cycle repeat graph. And that I could see happening as miners start to dump excess that they were holding at higher prices into the post-halving to kind of ease that transition from going from 12.5 Bitcoin reward to 6.25. I mean, that's a half 50% haircut on your income. But they can buffer that by throwing a lot of hash power, trying to get as much share of the overall hash rate as possible, stockpiling excess that they can, and then helping buffer that by unloading that excess at these higher prices post-halving. That'll help ease them into the post-halving environment, pricing environment, and kind of even out that drastic drop in income. But I think largely that we'll see this hold true, this price action into halving here, which will be this May area. I think this structure largely holds true. And then what's going to be interesting is how much of this back here follows suit on the. I think we might actually outpace this somewhat. The moves might be the same, but the pricing might outpace. This implies that we see an all-time high of 317,000 based on our January 2018 top area that we had. So I think all of that's within reason, but again, it's going to come down to investor demand, which I think there's tons of upside potential for that. Again, remember, not every millionaire in the world can own one Bitcoin. Mathematically impossible, because there's about 30 plus millionaires in the world. There's only 21 million ever to be produced Bitcoin. A million of those are lost from the Satoshi Genesis block, we assume, because they haven't moved. And then another 3 to 4 million are considered lost just because of the lack of movement, either lost keys or whatever. So you have this, actually the actual supply is going to be a lot less than 21 million. And that's just going to make the individual price projections go even higher. And that will manifest itself in supply shock. But we won't see that until not only this halving, but the following halving, okay, when the block reward drops to 3 Bitcoin per block reward. I mean, that's when you're really going to see an immense supply shock and prices really start to rocket. I know that's a ways off, 2024, but 4 years seems like a long time, but it'll be here before you know it. But these prices are, I think the next time we break 10K this time around, it'll be the last time you see that level and any prices sub 10K, much like what happened at 1,000. So again, guys, accumulate while you can is the lesson I think that needs to be impressed upon here. All right, guys, well, that's it for this video. Very bullish outlook on 2020, and I think even more so for 2021. And I think a lot of doubters are going to become believers in this next halving cycle. All right, guys, that's it for this video. I hope you liked it. Please hit like and subscribe. And if you're interested in what we do or want to be in the trading rooms with us, head over to tradelikeagenius.com. Not only do we cover crypto, we cover stocks, ETFs. We also do the Forex markets with binary options and commodities as well. All right, guys, I'll talk to you later on the next video. Take care. Bye-bye.
Trade Genius.